All right, y'all. So as you can see by the title of this video, I am going to be going over the first presented fair value gap. This is the only ICT concept strategy that I use, and it's strictly for New York Open. Yeah, most of my trading consists of swings, so yeah, I'll go over those in another video, but this is the most highly requested thing that I get in my TikTok, my DMs, my comments, all of that. So this is gonna answer all of your questions. This is the strategy I use at New York Open, the one that I post majority of. So yeah, we gonna get straight into it. Hopefully y'all learned something new, something useful that y'all can use, implement it into y'all trading. And if y'all wanna take the same exact trades that I take on stocks, swings, options, all that, my Discord gonna be down below, Telegram down below, everything is free. So yeah, y'all tap in and yeah, just get straight into it. Not trying to waste y'all time. Let's go. All right, y'all boys, let's get into it. So the first presented fair value gap, or imbalance, as I like to call it. You can use it either way. It can be used either way. So that, yeah, let me start writing. So that means you can use it as, let's make this a little bigger. Come on. Struggling. Imbalance. All right. So it can be used in either direction. Okay, it can be used in either direction. So that means it can be used as an inversion, continuation, and even as a reclaim. So in the sense of a break and retest. And what I mean by that is, say we have a bullish fair value gap, we can invert that, fully invert it, and then we go back down bearish. In the sense of a reclaim, I mean, we have the bullish fair value gap, we have continuation, we come back and retest it, and then we break that high, and we get the full continuation. You get it? And as far as a continuation, we would just have the bullish fair value gap, and we just continue on high. So yeah, that is that. So the earliest that you can find it, like the earliest, how can I put this? The earliest, you cannot use the 930 candle as the imbalance. The earliest that the imbalance can be is on the 931 candle. That's what I was trying to say. So let me show you an example of that. So say this is candle 1. Actually, no, this is going to be the imbalance candle because that's already big. This is candle 2. I mean, this is candle 1 now. Oh, I'm bad at this. And this is candle 3. Right. So let's make some wicks. Let's make some wicks. This is going to be our fair value gap, guys. All right, and this is, all right, come on. All right, let's make these all green, so they look like actual candles, you know? All right, so this is our fair value gap here. This is what a bullish fair value gap would look like. This is what our bullish fair value gap would look like, okay? Oh my God. Bullish FVG. This is a bullish FVG. And what I mean by the earliest that you can find it, is right here. This has to be the 931 candle. This cannot be the 930 candle. This can be the 930 candle. This can be the 930 candle. But The earliest that the imbalance, which is the second candle, can be is 9:31. So I'm gonna write that down. The earliest is 9:31, and that's very important. That's very important. This is very important, guys. The earliest that the second candle can form is 9:31. So yeah, just make sure you pay close attention to that. Um, the whole first presented fair value gap can be used as the focal point for the daily, like what would I say? It can be used as the focal point for the daily range. Like you can stretch this all the way out till 3:45 p.m. And yeah, price tends to come back to this a couple times throughout the New York session, and yeah. So we're gonna get straight into some charts. I'm gonna show you guys how I use it. The other stuff that I use it with, which are indicators in VWAP, and how you can find perfect setups using this strategy. And yeah, one thing that I will say, one thing that I will say, let's imagine down here we have our opening range, right? So we have our opening range down here. This is where price closed yesterday, okay? So say this is where price closed yesterday. So this is our opening range. Oh God, I'm really bad at this. Hopefully you guys are understanding this. And the opening range is literally from yesterday's 16:14 through today's open 9:30. This is the opening range, okay? So if price opens, if this New York session opens above the previous day like it does here, there is a 70% chance. There's a 70% chance that before 10 a.m., price is gonna come back into the touch the midpoint of the opening range. So let me go ahead and write that down for you guys. 70% chance. Oh my God, chance that price comes back into the midpoint of the open. Oh God, opening range before 10 a.m. What am I writing? And this is pretty much all I think you guys should like pay close attention to. Obviously I'm gonna show you guys more stuff, but for now, this is all that you really need. So take a screenshot of this if you need it. But we're about to get straight into some charts, and I'm gonna show you guys a lot of stuff that's gonna help you understand exactly what I'm talking about, like much better. So yeah. All right, so it's currently the next day. I got pretty busy yesterday, didn't finish the rest of that video, but we're gonna pick up right where we left off. So yeah, as far as what I have marked out, this is the previous day's low. These are things that you want to mark out on your chart as well. So this is the previous day's low that I have marked out here, and if we go up to the hourly, you will see that this is the previous. Oh, actually, I'm in regular trading hours because I marked out the previous day's close in regular trading hours. You go down, you probably can't see this, but in the bottom right, you're gonna see ETH. You wanna switch that ETH to RTH. And then that's how you can find the 1614, which is your previous day's close. And after that, you can go back to electronic trading hours, go up to the hourly, and then that's how you can find your previous day's low, find your previous day's high, and midnight open as well. I went on the 1 minute, found the midnight open, and midnight open is literally just 0, 0, like literally 12 o'clock, double zeros, you know. So yeah, that's where you find all of these, and these are levels, but they're also targets. Like they're also areas that you can use as TPs. So yeah, we're gonna get into it, but I'm gonna go back to regular trading hours, so we can get the market open candle, and then that's how we can get our opening gap. Yeah, I also went back and I watched that video. I kept on saying opening range for the 16-14 close to the New Day's open. That's actually the opening range, not the opening range. Sorry, the opening gap. Like that's how you find out if we gapped up or if we gapped down. It's not an opening range. The opening range is 9:30 to 10 o'clock. You get it? Like, yeah. I'm sorry for that, and also I'm also sorry for how hard I was typing in that video. Jesus Christ. Yeah, I apologize for that. It's kind of crazy, but yeah, man. So we're gonna get the 9:30 candle right here. Okay, so this is where we opened at 9:30. So to get the opening gap, not the opening range, but the opening gap, what you're gonna do is grab the previous day's close and then the open. What is it at? What exactly did it open at? 595.25. Let's just go with 50. This is your opening gap, and the opening gap is something that can get tested, like the midpoint within the first 30 minutes of the market open. The midpoint can get tested. Shit, the full gap can get tested. Like we can retrace the full gap, but as you can see, the midpoint of this is right next to the midnight open. So this is already telling me we're probably going to come back down and retest this area. You know what I'm saying? So yeah, we're going to get straight into it. I'm going to go back to electronic trading hours, and you will see what happened overnight. So if you look at this chart, we are obviously in an uptrend. We're in a strong uptrend, and most people would say, why would you go short in an uptrend? But at some point, bro, what's going up has to come down, you know? What goes up has to come down. So if we get to a point where we're overextended and VWAP is telling us something, the EMAs are telling us something, volume is telling us something, we're gonna obviously take it. So let's go to turn on our, wait, okay, everything's already on except for volume. So yeah, now volume's on, and let's get right into this. Go to the 1 minute. See what happens. See what happens. Let's slow this down a bit though. And what you want to wait for, you know, this whole strategy. This whole strategy is you're looking for the first presented fair value gap or first presented imbalance. This is 932, 933, 934. That's our first presented right here. This is our first presented right there. I hope you guys were able to see that before me, because yeah, this one was very easy to spot. Some of them are a little harder, but this one was very easy to spot. So this is our first presented. First presented FVG right here. Let's go down to like 12 or something. This is our first presented fair value gap right there. And just looking at the chart, the first thing I see, our volume is dying. Although we're still going up, the volume is dying. That's an indication that we're probably going to start reversing soon. This first presented fair value gap right now has just been used as a continuation gap, but we're going to see what happens. Again, the things that I'm looking at are this opening gap here. We have midnight open below. We have the previous day's close below. Again, what did I say about the opening gap? Price has a 70% chance of coming back and testing it within the first 30 minutes of the market open. We're overextended. Volume is dying. We're probably going to go lower. So, yeah, let's take a look at that. See what happens here. And we start to go lower. And let's see if we use this gap as a hold. or inversion. Okay, what I would like, the first thing that I see here is rising volume on the way down, fall like dying volume on the way up. In my eyes, this gap is instantly going to be used as a inversion. So what I would do here is sell. I literally would sell right there. I would use this previous candle's high or 10 points as a stop loss. Okay, yeah, it would be this previous candle's high as a stop loss. And what I would start to target, my first TP would be the previous day's high. Right here, this green line, previous day's high. This would be my first TP, and that's already, what would that be, guys? This would be a, if we're taking it here, from here to here, that's a 2 to 1. You could easily take this, go on about the rest of your day. There's nothing wrong with taking a 2 to 1, but we also have a lot lower. Like, the possibilities of this going lower are very high. So what else you could look at is the midpoint right here and midnight open. Next thing you could look at is the previous day's close. Next thing you could look at is the previous day's low. But at each one of these levels, what I would be doing is taking a trim. I would be taking a trim at each one of these levels. Like, there's no way I would have held all the way through this whole entire thing. I would have trimmed here, would have trimmed here. After the first trim, I'm moving break even. Like, that's off the rip, you know what I'm saying? So, but let's see what happens here. Let's see what we get. I'm gonna remove this, and then we're just gonna let this thing play out. See what we get. Zero drawdown. The first TP got smacked. After the first TP gets smacked, you know what we're doing? We're going break even. I usually go $100 just to keep it safe. I said 100, not 95. Not 105 either. $100. Yeah, so first TP got smacked. We are now below VWAP. The 9 EMA crossed below the 21. Those are all indications that I like to look at. Look at the rising volume. Yeah, this is just great to see lower. This is a V-shaped recovery to the downside. Like, everything is green. Everything is golden here. The midpoint has not got tapped into yet, but we are still. It's before 10 a.m. 10 a.m. is right here. 10 a.m. is right here. And the midpoint is about to get tapped into. Midnight open is about to get tapped into. Let's see what happens. We're retracing. And what happens here, the 9 EMA is staying below the 21. The 9 EMA is staying below the 21. We are holding below VWAP. And if you don't know what VWAP is, it's the volume weighted average price. Basically, to simplify it, you just use it. It can be used as a support / resistance level. And obviously in a downtrend, it's going to be, look at this. It's in this downtrend, we use it as resistance. So what we're going to see here is a move lower and take out midnight open, in my opinion. That's what it looks like here. As long as the 9 EMA stays below the 21, I would have stayed in this trade. And it looks like the 9 EMA is about to cross above the 21 here. I probably would have got stopped out soon. And no, we are staying below. We're still below VWAP. And let's see what happens. Okay, and the midnight open just got taken out right there. That's TP2. We're still below VWAP. 9 EMA is still below the 21. There would be no reason for you to get out of this trade. And as you can see, this all was based off of the first presented fair value gap being used as a inversion gap. This is just one example of how you can use this, and let's see what happens. As you can see, this was a great trade from start to finish. Literally from start to finish, this was golden. Yeah, man, that's one way that you can use the first presented imbalance. I don't know. I feel like this video is getting pretty long, so I don't know if I should show another example. But yeah, man. Actually, yeah, I'm not gonna show another example because I feel like this was a great example of how you can use it. And if you have any questions, you can shoot me a message. My Telegram is gonna be linked below. My Discord is gonna be linked below. My TikTok is gonna be linked below. I post these pretty much daily on my TikTok, and I get comments about these all the time. So this was me explaining how I use it.